Hey traders, Stephen Kowitzel here with thetradersplan.com. It is Friday morning, July the 15th. As usual, let's take a look at the overall market. Then we're going to look at some top ETFs of the week, what the top performing ones have been. So let's start with the Nasdaq real quick. I've been telling my subscribers it is, right here, this is kind of a bearish pattern if you look at it. It could break down. It got rejected at the 50-day moving average right there, and then it's kind of selling off. However, what is a little different, we've had some more reversals, some bullish reversals towards the end of the day during the last couple weeks. It is possible, now I just say possible, that we enter a bottoming pattern where the market chops around before it gets out of here. It is incredibly rare that, after a bear market, the market just kind of V-shapes straight out of here. I think that the March 2020 was really the exception and the outlier, but I'm really kind of keeping my mind open, and I'll change my mind on a daily basis, obviously, if this completely breaks down, but it's possible that we could get some chop for a while, let the market digest the summer and bottom out before it really breaks out and makes a meaningful kind of rally out of here. Now, we could 100% have bear market rallies, so just keep that in mind. But, right now, the price action of the overall market doesn't look good. So as usual, as I recommend, anytime the market is under the 200-day moving average, which is the black line, we follow the rules and we take half positions, okay? Let's look at the S&P 500. The chart really doesn't look that much different, right? It just doesn't. It's just kind of in this little range bound right here, and it could easily break down. I'd probably call it more bearish than bullish, but it's just a bunch of slop. Nothing really good, no good price action, so we just kind of have to wait this through. And I understand as investors and traders, we want to trade. We want to feel like we have to be doing something. It's okay to let things go. It's okay to not feel like you have to overtrade all the time, because we want to trade when the odds are in our favor, not just trading to feel good and press the button just because it makes us feel good, right? We want the odds to be in our favor. So let's look at some top ETFs of the week. Really almost everything is looking pretty ugly, and I have 252 ETFs on the list. This isn't all of them, but on the current week, really only the UNG Nat Gas. It really came down here to the 200-day moving average and is kind of bouncing. I would not be surprised if it really comes back down and creates really that double bottom. Because a lot of times, I talk about V-shaped. I'm very, very suspect of V-shaped bounces, just because I see most of the time they don't work. They bounce, they suck everybody in right here, and then they kind of sell off again and shake people out, and then there's your entry right there. So, but UNG is looking interesting. It definitely is leading. It is down pre-market. The futures are down a little bit pre-market. One of the only other ETFs, here's a couple of other ETFs that were up. You have this YOLO, this cannabis ETF, which in my opinion is in such a downtrend. There's nothing good looking here. Just that it was up 6% in one day. Maybe it was an ETF that was overweighted in a stock that was overweighted in the ETF, but that is not a buy in my opinion. Here is what is a little interesting. You have the TLT, or the bond ETFs. Now, these ETFs bonds have inverse relationships with interest rates. So if interest rates rise, bond prices are going to fall, okay? So now you have bond prices that have fallen way down here, and now it's trying to really eat its way through the 50-day moving average. Why that's happening is anybody's guess, but it potentially could make a bear market rally, this bond ETF, which means interest rates could be a little bit volatile, especially around the potential Fed announcement. So just kind of keep that in mind. This is an asset that has fallen. Let me look at the weekly chart. This has fallen a long ways, but let's just say it's fallen since $150 and now is down to $15. Bonds aren't conservative the way you think they are, because we have not been in a rising interest rate environment for a very, very long time. So a lot of people think they're safe. They might be from bankruptcy, but their prices can change just like stocks can. So it dropped from 115 to down here. It has had no meaningful rally, so I'm just really keeping an eye on it. I'm not saying I'm going to trade it if it breaks out, but that is something that is a little interesting. And I think we all, even though we know bonds and interest rates have an inverse relationship, we all really have to keep an open mind. Okay, so really, I don't really see anything actionable in the top 10. Let's go and look at some of the strongest ETFs out there. A lot of the U.S., anything from semiconductors to home builders, all those charts do not look like good setups at the moment. They're not breaking out really of downtrends. They're all looking pretty ugly. One ETF I did write down is DBC. Let me talk about this for a second. So this is a basket of commodities that is more weighted in energy, has like a 60+% weighting on energy. Here's what I want to talk about. The commodities have really sold off, and let's just say in the last month, have sold off hard, right? Went from 30 all the way down to 24. This ETF touched the 200-day moving average yesterday and reversed off it. If you believe in commodities and you believe energy is going back up, in my humble opinion, I don't think there's a better time to swing the bat than at this right here. It's pulled back hard. It's likely going to bounce hard. Is it probably going to bounce up here and then come back here and do something like this? Yes. But, it shouldn't break much below this line, really. I think this is a low risk, kind of a high reward entry if you think commodities are going to continue, because you can get in at 24.75 and you are risking, you can put a stop loss at 24, so you're risking 3% for a potential much greater upside. So in my opinion, honestly, this is just a pure pullback to support balance strategy. I think the risk reward is there. Does that mean it's going to work? No. But if you look at, so I now have this list ranked by relative strength ranking. So I'm looking at really the top ETFs and ETNs. A lot of these are ETNs because they hold futures commodities. They're all commodities, right? And this is I believe a 12-month ranking. So everything in the top 10 is all commodities. You can kind of see it here. A lot of these commodity ETFs are right at that 200-day moving average potential support. And that's kind of interesting. Now, once you get into the individual stocks, like IYE, IEO, some of them have overshot the 200-day moving average a little bit, but did try to reverse off the lows on yesterday. You look at some agriculture like corn, it's just kind of right in this range. So again, I keep coming back to where's the opportunity. None of the U.S. indices or ETFs are really breaking out. But you have all these commodity ETFs that have pulled back to the 200-day moving average range. And if we think inflation is going to continue, which I personally do, but it could sell off before it peaks, then I think the commodities, a lot of these commodity ETFs, this is what you need to be looking at, could be a potential good play. You have FCG. This is a nat gas. Holds individual stocks. This sold off really, really hard and is kind of right in this range as well. So now nat gas is down at in the pre-market, so something to keep an eye on. So maybe oil is kind of the place to look, but soybeans, massive move, and now they're back at this 200-day moving average. So you kind of see a theme. I think I'm really proving my point. I really think that is probably if you feel like you need to swing the bat somewhere, in my opinion, that's probably where you need to swing the bat. Now, anything you do, obviously you better be using hard stops. We use hard stops that way in case the trade does not work out. You just get out, no questions asked, let your stop get hit, and then you move on. So I hope this was helpful. Let me know if you have any questions, and have a wonderful weekend.